Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Today is Thursday, February 22nd, and in fact, we are into the second half of the trading week, and in fact we have quite an interesting and a financial landscape list with mixed reactions following the publication of the FOMC meeting minutes for the month of January. And in fact we have one of the key highlights from the minute is the fact that interest rate is likely going to be staying higher for an extended period of time. And due to this belief amongst market participants, we've seen quite some development across the chart, revealing the nature of how participants in the market is likely going to be reacting to this latest development. And of course, today we will be delving into the current market structure, looking at things from a technical standpoint to understand how market participants are thinking, and using the historical data we have to strategically position ourselves for the next move. So far this week we have been monitoring three financial assets which is on our watch list, and these are the USOILSPOT, which of course we saw some interesting rebound happen in the last 12-18 hours or so, which we are going to be looking at in a moment. And then we also have the USDJPY on our watch list, which though hasn't gained so much traction this week due to the uncertainty surrounding the intervention of the Bank of Japan into that market. So we are going to be looking at that too in a moment and see how we intend to position ourselves for the next move. And then my favorite asset, the XAUUSD, which of course has done I think I will consider the XAUUSD as one of the most profitable assets on our watch list for this week. So we shall be looking into that one too as well, with the utmost intent of positioning ourselves in such a way that we can capitalize on the next potential move. And of course I will say that based on what I saw on the chart this morning, we are likely going to be seeing some significant traction happen today. So I encourage us all to stay tuned in so that we do not miss out on any of the valuable ideas we will be deliberating on today. So grab your favorite beverage, biscuits, or what have you, so that you stay tuned in. And for those of you who are joining us for the first time, I do know you will be wondering what this is all about. What is it that we are doing on the Forex Morning Mastery? Well, I usually share a couple of videos during the course of the weekend, which usually details our plans for the new week. And in this video I do a top-down analysis, trying to project what market participant will be doing at the beginning of the week. Now, within the need to do follow-up details on this video, the Forex Morning Mastery was born. So during the Forex Morning Mastery, we usually come together as a community and engage in follow-ups and reviews of our current positions in preparation of both the London and the New York session. And the session officially kickstarts about 9:05 a.m. West African time, 8:05 a.m. UTC, and I recommend that you stay tuned in so you don't miss out on the insights that we will be sharing today. And it's also important for you to understand that my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you on board and I encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that are likely going to be affecting the market sentiment today. And we all know how important this is, especially for those of you who have been with me for a while now. We do understand that this fundamental factors has a way of manifesting on the chart in technical patterns and price movements. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and of course timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we have been monitoring since the beginning of the week, we have focused on economic features from both the United States and the Japanese economic docket. Now, this week is not laced with too much of high impactful events, so we had to include some mid-tier economic features to have a broader view of what majority in the market will be looking forward to make their trading or investment decisions. Now, so far this week, we've had some couple of events which have been played a major role in moving price action. From the Japanese yen, we had a machinery order, which of course came in beyond expectation, but has little to do in favoring the Japanese yen so far. Then yet on Tuesday, we had the merchandise trade balance, which also came in beyond expectation, though the balance sheet is still in deficit, but it came in beyond expectation. But that one too as well has nothing yet positive to push the price of the Japanese yen. Now, yesterday, Wednesday, February 21, we had some couple of high impactful events. We had speeches from Bowman, we had speech from Bostic. We also had the API weekly crude oil stockpile, which of course came in below expectation but showed sign of increase in stockpile in the United States. We are going to be looking at that too as well and see how the market has reacted to that figure. Now, the most important event from yesterday was the FOMC minute, which of course provided us with insight into the decisions made by the Federal Reserve officials regarding monetary policy, including interest rates, and of course the future direction of interest rate cuts for the year 2024. And one of the key highlights we came up with was the expectation that the Fed will keep interest rate higher for longer due to the ongoing inflation concerns and the resilient US economy. Now, this expectation is this development usually is expected to give the US dollar some push to increase in value, and of course the treasury bond yield too as well. However, the market has done the opposite in the last 18 hours, and I'm of the opinion that this may likely be due to the uncertainty and risk on sentiment in the market, which we will be deliberating on in a moment. Now, today, Thursday, February 22nd, we have a too high impactful event for today, which is the publication from the S&P Global, and that one is coming up in about in about I think about 6 hours or so from now. And for those of us who do not know what the S&P Global is and how important it is, for market participant? Well, to simply put, the publication from the S&P Global offers key insights into the health and performance of, in this case scenario, we are looking at the service and the manufacturing PMI, and gives us an insight into the performance of the service and manufacturing sector of the US economy. Now, this report will provide valuable data on factors such as business activities, new orders, and employment levels, which can directly influence the market sentiment. And I'm of the opinion that the reason why we have not seen that expected bullish traction in favor of the US dollar, especially following that hawkish report from the FOMC minute, may be as a result of market participants waiting to see how well the service sector and the manufacturing sector of the United States is before making any investment decision or aggressive bet in a particular direction. So we are looking forward to this event in about 6 hours from now. So I will encourage us to have the timing right on our calendar so that we can be on standby to capitalize on that move. Then this morning we saw some flash report, the flash PMI from the Japanese economy, and the service sector appears to be doing well. And one thing about the index for the PMI data is it's on a scale of 0 to 100. So anything below 50 is considered as not too good for the economy, while anything above 50 is considered as positive for the economy. And looking at the services PMI from the Japanese economy, it came in at 52.5, which is a little bit higher than 50, giving us signs that there is some positivity in that sector, though it wasn't as high as the previous month. Then the manufacturing sector isn't doing very well, as we saw the data come in below expectation, and of course below 50 at 47.2. Now, the other event, what other event are we looking out for today? Okay, we have some couple of more speeches from Harker, Kashkari, and Cook, who are all Fed officials. So we look forward to see what they will be saying, especially after the publication of the FOMC minutes that happened yesterday. So these are the high impactful event we are looking forward to today. And as technical traders, we do understand that the anticipation of this event has a way of influencing the market sentiment, where we shall be seeing how market participants will anticipate this event on the charts as price action. Now, talking about price action, let's move right into the chart and let's look at things from a technical standpoint. So the first asset we are going to be looking at this morning is going to be I forgot to open up my USOILSPOT chat early enough today. It usually takes some time before it loads up, so let's give it some time and let's see how far this is going to go. So while we wait for the chat to load up, I see your comment, Sam. Good morning to you. Thank you for the compliment. I really do appreciate it. All right, so while we are waiting for the chat to load up, I would appreciate you give the video a like. We have over 6 people on board right now and we only have 2 likes. Please kindly support this project. This is the only way and cheapest way, of course, you can support this channel to grow. Thank you very much as you do so. Your likes are valuable to me, and one thing you should know is that the more likes we have on this platform, the better it is that the algorithm will push this video and content to a wider audience of traders who will find this content beneficial to them too. And thank you very much, guys, as you do so. So the charts finally loads up right now. So the next asset that we are looking at right now is going to be the USOILSPOT, and what an interesting situation we have on this chart right now, as we had a buy position triggered during the New York session yesterday after price breached and broke out of that descending trend line we identified during our live session yesterday. Now, for the sake of clarity and for those who missed out on our earlier sessions, let's quickly run through how the week began for all of us here and what led to the decisions we made. Now, at the beginning of the week, it was more of price action ranging as due to the US public holiday, of course, the president's holiday on Monday. We saw how price started the week ranging between the $78 level and the $77.60 area to emphasize the prevailing uncertainty in the market at that particular point in time. And considering the fact that price action was trading above this ascending trend line we identified on the higher time frame, it made quite a lot of sense for us to look out for the breakout of the resistance line of that range to give us an opportunity to buy. Now, we saw actually price broke out of the resistance line of that range, triggered the buy position and the buy order, and we saw how price moved about 48 pips thereabout in our favor before the bearish momentum came in, resulting in a subdued trading activity, which was attributed to the absence of market participants from the US economy due to the public holiday. So the range went on for a while, and considering the fact that we had that ascending trend line as our yardstick to guide trading activities for that day, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we continue to look out for patterns and structures that supports the idea of buying that asset, and not unless the trend line is broken and breached to the downside can we start considering selling. And in fact, during our live session on Tuesday, we saw price break down that ascending trend line, and I did mention that a retest of the structure will be a beautiful opportunity for us to join that bearish move. And we had a sell limit around the $78 area as we saw price come back, retest the structure a couple of hours into the New York session to incite our first sell position for the week. And since that moment, we have been selling this asset as we rode the momentum all the way to the downside, and of course capitalizing on more selling opportunities had the breakdown of the $77.60 area, the $77 area, which we did capitalize on yesterday morning, and we saw another one happen at the $76.50 area. And if you remember vividly, we said we will be moving our stop losses accordingly to secure all sell positions. You know how we do it in this community. When price moves significantly well, we obviously move our stop losses, secure the current sell position, and we saw what happened about I think a couple of hours after our live session. Buy pressure resumed, and due to the descending trend line we marked out here yesterday, remember we said here yesterday that this descending trend line is going to be serving as our yardstick to guide trading activities for yesterday. Now, if price remained below the descending trend line, we obviously want to be looking out for patterns and structures that supports the idea of selling. But unfortunately for the sellers, we saw our price breached the descending trend line, which lines up exactly with that $77 area, which we captured during our live session yesterday for buying opportunities. And in fact, if you had missed out on that one, we saw price came back to retest the structure, and since that moment price had continued to find new highs. Now, as it is right now, we have a minimum of 3 buy positions running with over 150 pips in profit at this particular point in time. And for those of us who capitalize on this opportunity, well done, and kudos to you for being on standby. Now, as it is right now, we will be moving all stop losses. Like I mentioned in my commentary this morning, that we should move all stop losses accordingly to secure this position due to the recent development in this landscape, which I will be talking about in a moment. So from look of things right here, I will be suggesting that anywhere around the $77.80 and the $77.60 area seems most appropriate to move all stop losses to on this particular asset, while we also give enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our plans for today? Are we going to continue buying this asset today, or are there chances that sellers may come in at any point in time? Now, the recent rebound in the US oil prices could be attributed to the potential disruption in oil supply due to the geopolitical tensions in the Middle East. And of course, this could due to these concerns, market participants could project that if this escalation persists, we may likely see disruption in oil, which of course will result in high demand and higher prices. However, there are some other factors that we also need to take into consideration too as well. Remember, yesterday the American Petroleum Institute, that is the API, reported that crude oil inventory in the United States increased by 7.168 million barrels for the week ending February 16. That was last week, compared to the previous week's increase of 8.52 million. Though this figure came in below expectation, but it still shows a surge in the value of stockpile in the United States. Now, one thing this tells us is that there is a high supply compared to the demand at this point in time. And when there is high supply, what this simply means is that prices may likely, the oil prices may likely face some exerting pressure, that may push price to the downside. But I still think that the geopolitical tension in the Middle East is the only reason that is making oil prices stable and remain floating at within a positive territory. Now, yesterday also we due to the Federal Reserve's hinting that interest rate may have peaked and that it's going to remain higher for an extended period of time, we may still likely see I don't know how price is going to react to this, but the structures we have on the chart will give us an idea into what we will be doing, and we will be looking at that in a moment. Now, one thing I would like to say here is that in as much as the market participants are caught within escalating tensions in the Middle East and high supply in the United States, they will want to look forward to some further catalysts of factors that may give further clues into what they need to do. And of course, today we have the S&P Global Services PMI and manufacturing PMI from the United States, which everyone will be looking forward to. And of course, the Energy Information Administration will also be giving their crude oil stockpile reports. This market participant will be looking out for trading opportunities. So at this point in time, please, let's secure all buy positions at this juncture. Very, very important, as we may likely see some volatility happen today. Now, looking at things from a technical standpoint, we've seen our price has increased in momentum in the last 24 hours, giving us over 150 pips in profit. Now, one thing you will notice here is that towards the end of the New York session, yesterday stroke the Asian session, we saw how the bullish momentum was gradually thinning out, and this for me is a sign that sellers are still present in this market. And the question right now is, are we going to sell or continue to buy momentum? Remember, price action is still below our key level at the $78.50 area. So for those of us who missed out on my first edition on the USOILSPOT, where we did a top-down analysis on this asset, where we also identified the key level for the week, I would encourage you to watch that video to have a better understanding of how we got to this point, and the links to the video are duly stated in the description box below. So the fact that price still remains below that key level and the reduced momentum in the bullish traction since the later part of the New York session, for me, is a signal that sellers may likely come in at any point in time. And if we also take into consideration the fact that price is currently trading around the $78 area, a level which was initially our resistance line, at the beginning of the week. We should know that we are within the seller's territory at this point, and also remember that our first sell position for the week started from this $78 area. As you will see, we saw the breakdown retest of the structure during the Tuesday's trading session, and right now price is back into that area. And I want to That is one of the reasons why I said we should move our stop losses too, as we never can tell, sellers could come in again from this particular area to push price further to the downside. Now let's quickly take a look at what things are looking like on the 4 hours time frame to have a better perspective into this. Now the first thing here is you know what we did on the 4 hours time frame. We took into consideration the nature of price action since the beginning of this month of February, and in fact we saw how it has been a bullish momentum, and after connecting the series of higher lows, we have this ascending trend line to work with. Now looking at what happened during the course of this week, we saw price action break down this ascending trend line for the first time this month, giving us a bearish signal to work with. Now from a technical standpoint, when price breaks down a key structure like this, there is a tendency for price to come back and retest the trend line in an attempt to continue the downtrend move. So with this understanding in mind, we cannot ignore the potentials that sellers could actually come in at any point in time. And considering the fact that in the last 10 to 12 hours price action has been oscillating just exactly around this ascending trend line, it's a suspect for us to start considering selling. So at this point in time, we shall look out for selling opportunities around this area, like a reversal pattern, maybe in the form of a double top structure, head and shoulder pattern, or even a rising wedge, where we will mark out the neckline after the formation is mature, then sell the breakdown retest of the neckline of that structure. And of course, I will be updating you in my comment section on both my TradingView and Telegram platform if this ever happens. Now if this does not happen and the contrary happens, where price action climbs back above the ascending trend line, then we will start considering buying this asset as price is back into the buyer's territory. So above the ascending trend line makes quite a lot of sense for us to add more buy position to our existing trade. So I just wanted us to see what things are looking like on the 4 hours time frame, so we can have a better idea into what is going on in this market. So let's scale back down into the 1 hour time frame and let's see what we are going to be doing. So like I said earlier, if we in any way see anything like a double top structure here, we mark out the neckline, then sell the breakdown of the neckline all the way to the downside. So let's see how the market will play out around this area. But if price continues to climb up and it leads to the breakout of our key level at the $78.50 area, we definitely will be adding more buy positions to our existing trade. So this is my simple view on the US All Spot for today. I would encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. As always, I will take the next 5-10 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. And you can also use that time to mark out these levels accordingly on your chart, as you will be needing them as a reference point to guide your independent trading decisions. And please guys, if you have found this content helpful and useful in making your independent trading decisions, I would really appreciate your support by giving the video a thumbs up, and thank you very much as you do so. All right, all right. In the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. And for those who have clicked on the like button, thank you very much. Thanks for the support. I really do appreciate that, and thank you. Okay, I see a comment here from Rex Vagara. I hope I pronounced that correctly. Rex, good morning to you. Glad to have you around with us this morning. So you say here that do we have analysis for GBP USD today? Unfortunately, no, we do not have. GBP USD has been taken out of our watch list for the last 3 weeks or so, and instead we have been monitoring the USDJPY. Probably we may start doing something on the GBP USD from next week as we begin to see some level of fear going on in the USDJPY market, especially after the verbal intervention from the Japanese bank officials as regards to intervention in that market, which may likely incite some uncertainty in that environment. And let's see what things will look like anyways. Maybe by the end of this week I should be able to make a decision whether we will continue with the USDJPY for next week or bring it back the GBP USD. All right, Rex, I hope I answered you. All right, so in the absence of no further questions, I want to assume we are all on the same page, and in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the USDJPY, and on the USDJPY, sincerely, we have quite an interesting situation going on in the market right now. As you will see, the current market condition has been very, very choppy since the beginning of the week. If you look at things from a technical standpoint, you will see that since the week began, we had a range bound trading activity where price action was initially confined within the 150.285, though the week started on a strong bearish note. As you will see, price started at around the 150.285, dropped into the 149.875 before we saw this move back into that resistant line. And since that moment, we've seen price, the range expanded further into the 150.450 area and the 149.680 to further emphasize the prevailing uncertainty going on in this particular market. And this for me is a sign that the uncertainty here may likely incite some unexpected traction that the market might not see before it finally happens. But one thing we usually do, of course, is to rely on our technical skills, looking at try to understand how market participants are behaving within this structure. And one of the things that is affecting the uncertainty in this market, in fact, we have various factors affecting this. Now, the main one is the uncertainty about the Bank of Japan's policies. Remember, in the last 3 to 4 weeks, we have been talking about the hawkish comment from the Bank of Japan's governor. That was, I think, at the beginning of this month, or I think the last week of last month, where he did mention that the chances for the Bank of Japan to pivot from their current ultra loose monetary policy is coming into fruition due to the reduced inflationary pressure in the Japanese economy. And this, of course, gave some glimmer of hope for buyers of the Japanese yen, and we saw some traction in that regard. But the resilient US economy did not allow the yen to gain any more traction. Then later on, I think the following week after that, we had of the comment by the deputy deputy governor of the Bank of Japan, where he mentioned that though the Bank of Japan is pivoting from the ultra loose monetary policy, but the rate hike may be on a cautious note, so it's not going to be an aggressive rate hike. So this is not what buyers of the Japanese yen want to be hearing at this point in time. So what happened? We saw price climb up again against the Japanese yen. Now we begin to hear some recent verbal intervention again from the Japanese government, where they were saying they will be intervening in the currency market to help prevent the yen from falling further, and despite the US dollar not showing much strength. Now this is another factor that is really inciting the uncertainty in this market. Yesterday we had the Japanese finance minister Suzuki saying that he's closely monitoring the currency movements, and in his words he said that along with the comments from the Bank of Japan governor giving in support to the yen. However, if we also consider the health situation of the Japanese economy, remember last week we saw the GDP of the Japanese economy, where we saw a contraction of 3.3%, and the previous quarter too as well we saw a contraction, and 2 consecutive contraction says that the economy is technically in recession, and this is not too good signs from the Japanese economy. So this news are like a causing mixed reaction in this market to further buttress the uncertainty in this market. So we can see what is going on here, and for me, if this persists into the end of the week, I might likely drop the USDJPY from next week's assets on our watch list and bring back the GBP USD. But let's see what is going on in this market so far. Now, as for the US dollar, it is still struggling to attract buyers, which is contributing to the USDJPY's pullback today. However, expectation that the Federal Reserve will keep interest rate high for a while, as suggested by the recent FOMC meeting minutes, is supporting high US Treasury bond yield, and we know how the US Treasury bond yield is directly proportional to the US dollar. If the US Treasury bond yield rises, the dollar also would rise, and if it drops, the US dollar will also drop. So this is good news for the US dollar and suggests that it might strengthen against the yen in the meantime. But we shall look at our technical structures to guide our decision so far. Now, looking at what has been going on here since the week began, remember we had our first buy positions around this area, had the 150.100, and we added one more position at the breakout of the 150.285. We saw price move significantly well, about 33, the second one to about 15. We moved our stop loss. We had about 33 pips on that one, not too much at all. Then we saw selling opportunities come in again on Tuesday when price broke down that ascending trend line and the 150.285, and we saw price drop with about 56, 57 pips thereabout. We saw another one right here. So it's not really, the traction wasn't really that strong, and as at yesterday we said here that we will be positioning ourselves for buying opportunity, considering the fact that sellers have been finding it difficult to break through that area between the 149.870 and the 149.680 since the beginning of the week. As you will obviously see here, every attempt by the sellers to break through has been met with strong resistance from the buyers at every point in time, and this for us made us label this area as a temporary demand zone, and for the fact that price remains above the structure, we said we will be buying this asset. And with this information in mind, yesterday we decided to position ourselves at the breakout of the 150.100, and one of us was asking me if you should be doing a retest of structure, which I said if you're a swing trader, it makes a lot of sense. We saw price came back, retest the structure, and boom, it went all the way to the upside, triggering about two positions. The first one 38 pips, while the second one also moved about 18 pips. So the traction hasn't really been significant so far this week on this asset, and by now we should know why that is happened. happening at this point. Now, during my commentary this morning on this asset, I identified a new structure to guide our trading activity for today, and that is this ascending trend line, which as a result of connection of the series of higher lows here. Now, there are two factors here that support the bullish momentum from a technical standpoint. The first one is the fact that price still remains above our ascending trend line, and of course you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying that asset, and not unless the ascending trend line is broken can we start considering selling this asset. So that is one factor here. And the second one is the fact that price still remains above this temporary demand zone at between the 149.870 and the 149.680, and ever since price came back into that structure here on Tuesday, we've seen series of higher lows here to further buttress the strength of the buyers around this particular area. So with the way things are going here, it makes a lot of sense that we'll continue to look out for patterns and structures that supports the idea of buying this asset. I had a buy limit order around this area with the hopes that price action may be coming back to retest the structure, giving me another trigger around this area. And for those of us who capitalized on this one, well done to you. So we shall continue to look out for more opportunities to buy. We have multiple levels here like the 150.285, and of course we also have the 150.450 area. In fact, if price can break out of the 150.450, this will be a very good opportunity to continue the uptrend, as price action would have broken out of the highest point for this week. So at this juncture, it's still looking very bullish at this point in time. However, the market can be very unpredictable, so we want to take into consideration the potentials the sellers also have in this market. Now, if we are going to consider selling this asset at all, I would first of all like to see price break down that ascending trend line, break down the 150.100 before start considering selling. Now, we are not getting too excited here. We are not jumping into a sell positions right away. Remember, price is still above that demand zone, and it doesn't make any sense selling an asset when price is above that demand zone. So what we are going to be doing here is to exercise patience and wait for price to give us a confirmation before jumping into that sell position, and the confirmation will look like this. We want to see signs that buyers are finding it difficult to stay above the ascending trend line, and this would reflect on the chart as a retest of structure, continued down selling pressure around that area. Then we can have a sell stop order below the 150.100 and we join the bearish move. Now, when we join the bearish move, we want to ensure that we be on standby to move our stop losses accordingly, because we are within the buyer's territory. Anything could happen from that area, so let's ensure we are on standby to move stop losses accordingly to secure position, and not until price break through the 149.680 area can we now feel comfortable in that sell position. So this is what we shall be looking at today, and of course you can see how crucial that ascending trend line is going to be for us in making any informed trading decisions for today. So I encourage us all to mark out that trend line on our chart and let it be the basis behind any decisions we are going to be making today. So this is my simple view on the USDJPY for today. So let's see how the market will play out, and of course I will definitely be giving you updates as at when due on both my Trading View and Telegram platform. If you have any questions whatsoever, feel free to let me know in the comment section. As always, I will take the next 10-15 seconds off to see if there are any questions before we move on to the next asset on our watch list, and I encourage you to use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. And don't forget to give the video a like. I am looking forward to that. And for those of you who had liked already, you guys are wonderful. Thank you very much as you did. So let's see if we have any questions before we move on to the final asset on our watch list. All right. Okay, you're welcome, Rex Vagara. All right, I'm glad you found that useful. Okay, so in the absence of no questions, I want to assume that we are all on the same page here, and in that regard, we shall be moving right into the final asset on our watch list for today. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And since the beginning of this week, we have been buying this asset. Remember, we capitalized on the buy limit around the 2015 right here on Monday, and since that moment we saw how price had consistently found higher highs and higher lows, and not until Tuesday stroke Wednesday's trading session we begin to see some choppy market conditions in anticipation of the FOMC minute. And following the FOMC minute, of course, surprisingly to me, we saw price again continue to gain traction to the upside, which for me is a surprise. I will tell you, to be sincere, because I was expecting that the dollar will rise following that FOMC minute, but we shouldn't get too surprised. Actually, remember, we have the geopolitical tensions in the Middle East going on, and we have major economies going into recession at this point. The Japanese economy is technically on recession. The United Kingdom is technically on recession, following two back-to-back contraction in that economy, which of course may send some ripple of potential recession in other economies. And when such things happens like this, there is a high chance for market participants to move their capital from currency assets to safe haven assets such as the gold. So we shouldn't get too surprised on that one. But let's quickly run through how the week started for us all in this community, what led to the decisions we made, and how we manage our positions in the last 4 days. Now, at the beginning of the week, it was more of price action trading within the range, though the week started on a very strong bullish momentum, as we saw price started at around the 2010 $1.50 level, and it rose all the way into the 2023 area before we saw a barrier in the momentum before price came back to retrace back into a zone. So initially we had a range bound trading activity where price was confined within the 2023 and the $2010.50 level for the first I think 12 hours or so before we gain some traction. Then one of the things we saw again, in addition to that uptrend situation, was this break out of this descending trend line we identified on the higher time frame. Now let me quickly state here that for those of us who missed out on my weekend video on the XAUUSD, I will encourage you to go ahead and watch that video so you can have an idea into how important this trend line was as regards to this current market structure. So we saw price break out this trend line, and then this was a beautiful signal that we may be seeing an uptrend scenario. Now, coupled with this was the fact that we had an ascending trend line from last week Wednesday. Remember, following the CPI data last week, when we saw that positive traction in favor of the US dollar, making the gold price crash into the key level around the 1985 area, where we saw the price of gold recover, and then it transitioned into a series of higher lows here, giving us a couple of ascending trend line to work with. And you know how we use our ascending trend line in this community. As long as price remains above the ascending trend line, we have no business selling this asset. And coupled with the fact that price broke out of that descending trend line we identified on the higher time frame, it makes quite a lot of sense for us to look out for patterns and structures that supports the idea of buying. Now, with that information in mind, we decided to look out for ways to capitalize on the uptrend move. So as at Monday, we were around here and we said, let's see how far this retracement phase will go. In that regard, we identified a temporary demand zone around that confluence between the ascending trend line and that descending trend line. So we had a temporary demand zone between the $2015 area and the $2010 area. So we had some buy limit around this area. We had one at the 2015 and we had another one at the $2010.50 level, but fortunately one of them got triggered at the retest of the 2015, and since that moment price action had continued to find higher highs and higher lows, and we also capitalized on more opportunities by adding more buy positions. Had the breakout of the 2023, we added one here, and we also added another one here, making the third one, but that one did not do very well at all, and we saw price drop, leading into that consolidation phase ahead of the FOMC minutes. Now, yesterday, of course, Wednesday, the inability of buyers to break out of that $2032 zone, 2028 zone, was more or less a sign that sellers may likely be coming in at that particular point in time. And when we compare the structure to what we saw on the higher time frame, we realize that we may be in a seller's territory. Remember, the sell position that got triggered after the US CPI data came in exactly around that area, as you will see there, and we saw some selling pressure again around this area, the upper week Friday. So it's a territory known for selling pressure in the past. So as a result of the inability of buyers to break out of that area, we decided to start considering selling this asset. And I can remember telling you that buying the XAUUSD, the uptrend situation on the XAUUSD is coming to me as a surprise, considering the fundamental factors behind the scenes. And if I see a selling opportunity, I was actually thinking that it's going to go to the downside very, very well. So we had a sell position triggered here yesterday. In fact, if you missed out on that opportunity, we saw how the market came back to retest structure, and boom, price went all the way to the downside, though it didn't move very well at all, as we saw price move about 80 pips thereabout, while the second position moved about 30 pips thereabout. So we moved our stop losses accordingly, though the second position did not do very well, as we got stopped out on that one. And since then, we have seen price action gains. We've seen this market gain some bullish traction in that regard, and right into the Asian session, price continued to find higher lows and higher highs. Now, despite a more optimistic market atmosphere, the US dollar is facing challenges even after the Federal Reserve's January meeting minutes, which of course hinted a more aggressive stance on interest rates. Now, surprisingly, the US dollar is dropping in value, which is helping boost the price of gold. Now, adding to these worries is the tensions in the Middle East, which of course is giving an extra boost to safe haven assets such as gold, as investors will be seeking safer assets that is not affected by geopolitical tensions in the Middle East. Now, like I said earlier, due to the ongoing inflation concerns and the recent resilient US economy, interest rates at this point in time will be kept higher for an extended period of time. Now, it is expected that if interest rate is higher, the value of the US Treasury bond yield is going to rise. And of course, we've been seeing that in recent times. And you know how the US dollar is directly proportional to the US Treasury bond yield. So if the US Treasury bond yield is rising, it is expected that the US dollar should to rise. But as you're seeing on the chart right now, the US dollar is not rising at all, but dropping. So given this factor, it is wise to wait for gold to convincingly break out and remain accepted above the $2,032 area for us to feel very, very confident staying in this buy position, as you will see. And for me, this level here is an area I want to see how the market participant will react to during today's trading session. So if price action stays above the 2032, I'm of the opinion that we are within the buyer's territory, which of course still falls within and above the ascending trend line, pointing towards more uptrend scenarios. And if price continues to climb new highs, we have the $2,035 area, which we can also use to maximize the profits on this one. So we have the $2,035 area marked out right here. So I would like to be adding more buy positions if price action goes ahead to break out of this particular structure. So I encourage us all to also mark out these levels on our chart, as we will be needing it to support the bullish idea in this market. So at this point in time, we have a minimum of one buy position triggered at this point. Let's see how far this momentum will go. Now, in as much as we're looking out for buying opportunity, which I said is surprising to me, that's what the market is presenting to us, we have no other choice than to follow suit. In as much as we're looking out for buying opportunities, we cannot ignore the potentials of sellers. So that is why I said here that we are going to be selling any sight of reversal pattern around this area. And in fact, if it leads into a situation where price action breaks down this ascending trend line, well, I think it will be a very good opportunity for us to consider selling this asset. So a breakdown retest of the ascending trend line will be the straw that will break the camel's back to make us consider selling this particular asset. So I would like to see selling opportunities only at the breakdown retest of that ascending trend line. And if price continues to drop further, the breakdown of the $2,028 level is there, the $2,023 area, to add more selling positions to our existing trades. So I encourage us all to mark out those levels on our chart, as we will be needing them as a reference point to guide our trading decisions for today. So let's see how the market will play out going forward. Trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. So that is that on the XAUUSD for today. I hope I made myself clear, but if you have any questions or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off, see if there are any questions whatsoever before we go ahead to round off on today's trading Forex Morning Mastery session. Thank you very much, guys. For those who had liked the video, I really do appreciate your support. All right. So, in the absence of no questions, I see you, CIS. You're welcome. I'll take that as a compliment, and thank you very much. So, in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we have come to the end of Thursday's edition of the Forex Morning Mastery with Sheriff Daramola. I hope you are able to gain one or two things from what we discussed here today, and in fact I do hope you also marked out these levels accordingly, as we will be needing them as a reference point to guide our independent trading decisions for today. And I dropped the link to the XAUUSD live session, which is pinned at the top of the comment section. You want to be clicking on that link so that you and of course click on the notify me button so you can get notified as soon as we come on live. Now, for those who do not know, the XAUUSD live window is a platform where we come together to monitor real-time price action on the XAUUSD chart. So this usually kickstarts happens during the New York session. 5-10 minutes into the New York session is when we start, and it lasts about 5 to 7 hours depending on the volume of trading activities for that particular day. So I look forward to seeing you guys right in the comment section of that platform. Yesterday's session didn't take place due to some technical issues beyond my control. I couldn't communicate to anybody at all. I never had access to the internet, so it was very complicated for me, but I hope today will be a better one, and let's see how things will play out today. So it's on this note, we've come to the end of the session. It has been a wonderful moment with you guys. I really do appreciate every single moment I had with you. Thank you for the likes, thank you for the support. You guys are wonderful. So today we were able to attend to 3 of the assets on our watch list for this week, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD, where we were able to use the historical data we find to strategically position ourselves for the next move. And I do hope you all marked out these levels we illustrated during the course of the session. If you had done that, well done and kudos to you. So all we just need to do is exercise patience and allow the structures to mature. For those who are joining us for the first time, I do hope you are able to gain one or two things, and if you did, you want to be part of our subsequent editions, as the more time you spend with us, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So I look forward to seeing more of you same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare ourselves for tomorrow's trading session, which happens to be the last trading day of the week, and it promises to be another exciting one as we look forward to some more positive traction in the market as market participants round up their trading activities ahead of the weekend. So you don't want to miss out on that one too. So it's on this note, I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.